Warren Buffett, often heralded as the Oracle of Omaha, is one of the most acclaimed and successful investors in history. With a net worth that has placed him consistently among the richest individuals globally, Buffett's investment strategies are studied by finance professionals and enthusiasts worldwide. Born in 1930 in Omaha, Nebraska, Buffett displayed an early interest in business and investing, which was cultivated through his education at the University of Nebraska and Columbia Business School, where he was mentored by Benjamin Graham, the father of value investing. Buffett's approach is simple yet profoundly effective, focusing on understanding a business's intrinsic value relative to its market price. He invests in companies that are understandable, have a consistent operating history, and possess favorable long-term prospects. This method, known as value investing, emphasizes long-term growth over short-term gains and is based on fundamental analysis rather than market trends or economic cycles. His company, Berkshire Hathaway, originally a struggling textile manufacturer, transformed under his leadership into a massive conglomerate by acquiring businesses with strong fundamentals and excellent management. Buffett's strategy involves buying and holding a concentrated portfolio of businesses whose value and cash flows are predictable and robust over time. He is known for his frugality, a meticulous focus on business fundamentals, and an unwavering patience to wait for the right investment opportunity, making him a true exemplar of value investing principles. Warren Buffett epitomizes the principles of value investing through his disciplined approach to seeking out undervalued companies with strong fundamentals and long-term growth potential. That's why we dedicate our channel first video to him. Stay tuned as we uncover the wisdom of Warren Buffett, providing you with actionable insights to help you think and invest like him. Enjoy the video.
Testing. 1 million, 2 million, 3 million. That's working. Okay. I'd like to talk to you about your financial future, and I hope those figures become applicable to all of you as we go along. And I'd like to start by posing a problem for you. And incidentally, I'm just going to talk for a couple minutes, and we'll do Q&A, because what we want to do is talk about what's on your mind. But I'd like you to think about this for just a second. If, as we walked out of here today, I said I would like to buy 10% of your financial future, I was going to write you a check today, and from this day forth, you were going to give me 10% of everything you earned. How much would you want to charge me for that? I'm going to buy 1/10 of you. And I may take the low bid, incidentally, so be careful what you write down. Well, I think if you thought about that a little while, you can contemplate that for a few minutes. You know, you're going to get a check from me today, and you can do anything you want with the money, but from this day forth, you have to give me 10% of what you earn. I think it would be very foolish of you, any of you, if you asked for less than, say, $50,000. Now, it's going to be a few years before you're out earning money, and so I've got a few years of dead money there, but then I would start getting this royalty on you as you went along. So I really think that if you thought about it, most of you would want a fair amount more than that, and I think you'd be right. Fortunately, I didn't make this deal with anybody when I started out, so nobody's got a 10% royalty on me. But I think that 50,000 would sort of be the absolute minimum. And if you think about that, that means that right today, you are worth 500,000, because if 10% of you is worth 50,000 in cash today, your potential is worth a minimum on a 100% basis of $500,000. That is the big financial asset you've got. It's way more important what you do with that $500,000 asset that you own today than whether you decide to buy stocks or bonds, or whether you put your money in a mutual fund or pick your own stocks or anything of that sort. The biggest financial asset that you have going for you by miles is the value of your own earning power over the years. So that's really what you should focus on. If you're focusing on your financial future, that means you should focus on you. Because whether your 10% is worth 50,000 or 100,000 or 300,000, which would be 500,000 or 1 million or 3 million for all of you, whether it turns out to be one or the other is really dependent in a very large part on what you do in the next few years. All of you in this room have the brains to do extremely well in life. You've all got the energy to do extremely well in life, and then the question is, how do you apply it? If you've got a 200 horsepower motor, do you get 200 horsepower out of it? Do you get your full potential, or do you get 100 horsepower or 50 horsepower? Now, there's two things that can hold you back in getting the full horsepower out of your engine, whatever it may be. All of you have big enough engines. And one of those is a lack of education, but that probably isn't going to happen to very many people in this room. If you did have a lack of education, if you didn't have a chance to get a decent education in life, it wouldn't make any difference what that potential was, because you'd never unlock it. But the second most important thing, and equally as important, is in terms of the habits that you develop, in terms of what you do with yourself. When we hire people, we look for three qualities. We look for integrity, we look for intelligence, and we look for energy. But if they don't have the first one, integrity, the other two will kill you. Because if you're hiring somebody without integrity, you really want them to be dumb and lazy, don't you? I mean, last thing in the world you want for them is to be smart and energetic. So smart and energetic only goes with integrity. You make your own decision on that. You can't change your IQ or how far you can throw a football or how high you can jump or the color of your hair very easily. But you can elect to have integrity that matches anybody else's. And if you match that with intelligence, which you have, and energy, which you have, you will get an extraordinary result, and you'd be very foolish to sell me 10% of yourself for $50,000. On the other hand, if you don't match it with that, your potential will, in a significant part, go unused. And I'll give you a little simple test to apply in terms of thinking about the kind of habits you want to develop, because you can have any habits you want to be. You can be lazy, you can be prompt, you can be late, you can be honest, you can cut corners. I mean, you have all these choices, and those are choices for you to make. Nobody else is going to make them for you. And I would suggest that you play this little game with me too. Think about the person you would most like to be in life. So maybe it's one of your contemporaries, maybe it's somebody a little older, but pick out the person you admire the most, the person that you'd change places with if you could. And then write down why you admire them. Just put it on a piece of paper. And then figure out the person that you would least like to change places with. Who really turns you off? Who do you find repulsive? And list the reasons why that person turns you off so much. And put those down on the other side of the paper. And then look at that list. And you'll find that everything on the left-hand side, what you admire in other people, the qualities they bring to life, cheerfulness, generosity, all kinds of things. You'll find those are things you can do yourself. It's very simple. You got to apply yourself, but the habits you form in doing that early on will carry you through life. And on the other hand, you'll find that the things that make people repulsive, selfishness, obnoxiousness, all these things, egotism, are things that no one has to have. If you find those in yourself, you can get rid of them as long as you get rid of them early. So all I suggest is that you write down a list of what you admire, what you find contemptible, and decide that the ones on the admired side are ones you're going to acquire for yourself. And if you do that when you're young, it'll carry you through the rest of your life. This doesn't work if you do it when you're 50 or 60. By then the habits are too well formed. But if you do it early, behavior becomes a habit. So if you do that, 2 or 3 years from now, if you go through the same exercise, you'll find out that the person you admire the most is yourself. That can be a little dangerous under some circumstances, but it's not a bad thing. I mean, you want to be somebody you like, and you don't want to be somebody that you dislike. And form those habits early. You basically can't miss. Now, I'll give you one other small piece of advice that's just a corollary on this, and then we'll get to your questions. And that is, as a general matter, as a one piece of specific financial advice, I would say, avoid credit cards. Just forget about them. We're in various businesses that issue credit cards. The American public loves credit cards. But if you start revolving debt on credit cards, you're going to be paying 18 or 20%. And you can't make progress in your financial life going around borrowing money at 18 or 20%. you can make a lot of money by lending it out at 18 or 20% over time. If you can find anybody that's good that will borrow from you. But you don't want to be on the side of the equation that's always behind in life. I was lucky. I'd saved about $10,000 by the time I got out of school. That $10,000 was really worth millions I might have earned later on, because after you get a family and everything, the expenses roll in. But those were my tools to work with, but it was only because I was ahead of the game. If you're behind the game by $10,000 at some point and paying 18 or 20% interest on it, you will never, you'll never get out of it. So the trick, I've got a partner that says, all I want to know is where I'm going to die, so I'll never go there. And that's true in financial matters as well. You want to figure out where you don't want to be ahead of time and avoid that. And I get about a dozen letters a day from people who are having terrible problems. And there are two reasons why they have terrible problems. One is a number of them have had health problems of some sort. I mean, they have really been hit by or somebody in their family has been hit by some kind of catastrophic illness. And that is it's a terrible thing to happen to any family. And they run up bills they can't pay, and really only society can solve that one in terms of protecting people against that. That's just plain bad luck. But the other one is from people who run up credit card debt, and they're facing bankruptcy, or they've been through bankruptcy once before, and they owe a whole bunch of money, and they can't even pay the interest, let alone pay any principal. And half of my letters come from people like that, and that problem is avoidable. Catastrophic illness is not, but credit card debt is something you bring on yourself, and it's way better, it's way easier to stay out of trouble than to get out of trouble financially. And I will guarantee you, if you run up big credit card debts, you will be in trouble probably the rest of your life in terms of your financial situation. On the other hand, if you get ahead of the game, even it's on a very modest scale, so that money is coming in from investing, and people owe you money, or equities owe you ownership, you'll be way ahead of the game compared to paying it, always paying your creditors every month. So my advice to you is, if you can't pay for it, don't buy it, and get yourself in a position where you can pay for anything, and then we'll be glad to see you at Borsheim's or the Nebraska Furniture Mart.
Don't forget to hit the like button, subscribe, and click on the notification bell. This video is not personalized advice for the viewer. We are not licensed financial advisors nor real estate brokers. This video is neither a personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective information and commentary. Any third-party content we show should not be deemed or endorsed by us. Thank you so much for watching. We will see you on the next one. Goodbye.